Hello and welcome. We're joined by none other than Viswas Raghavan, the man who's famously called Viz Raghavan and is cutting some of the big deals for JPMorgan. Thank you very much for joining us. Good to have you on our show, and that too in your city. Should be asking you though straight away, how are things shaping up sitting in London? How is the recovery looking to you?
The recovery pretty much, in place across the globe. Different stages of recovery. I mean, in some countries it's much more advanced, in some a lot slower. Without doubt, I mean, we were all worried about double dip and, things getting a lot worse again. We don't see that coming. However, we are still kind of, there's a cautious optimism amongst the market. Investors are pretty, cautious. There are some equity stories that get sold very, very easily, others that struggle. But overall, I think, we're out of the woods.
What are you cautious about when you say there is cautious optimism? What is it that you're cautious about?
Cautious of that the pace of growth stalls. People were expecting 2.5-3% in the US. It turned out to be a 1.5%. So there is no concern that we are out of the woods, but there is some concern, and some serious concern, that the pace of recovery will be very, very slow. And what that means for growth, for dividends, for a whole host of earnings, etc.
So obviously that makes you a lot more bullish then about what's going on in countries like India. The global hunger out there looking pretty solid?
Absolutely. People already are looking at countries like India for effectively, making up the growth in their portfolios. I mean, to give you a very good example, one of the stories, and we were talking about this earlier, is the SR story. I mean, effectively, when we IPO'd SR in May, this was right in the midst of, the Greek crisis, elections in the UK. There was this volcanic ash from Iceland, which screwed up travel for half the world. And we effectively, when we brought SR to the market, the premise or the fundamental investment thesis was India growth via a UK PLC governance medium. And that was a very, very successful transaction. It still remains the largest IPO in Europe.
So in that case, most of the people who are actually doing big deals for sitting here in London, then they're buying the big story of the domestic consumption in India. They're not just raising funds out here and using London as a sounding board, but people are actually going out there to submit themselves to the India domestic story.
Absolutely. I mean, you are effectively making or raising money to effectively finance the local growth. I mean, going back to SR again, this is around domestic power, domestic oil and gas, and investors are happy to invest in this because fundamentally this is investing in India growth, and the returns are a function of India growth. So,
you think there's enough appetite though in the Indian market, looking good from that respect?
There is plenty of appetite. I mean, the market is liquid. I mean, there's a lot of cash waiting to be put to work, but that liquidity is very, very selective. So it is available for the best names, for the best, equity stories. And if that is true, if there's good management track record, if, the equity story, stacks up, investors are happy to part with their money in significant size.
What about capital raising and M&A? I mean, do you think it's going to be one versus the other, or will capital raising somewhat dominate?
I would say a mixture of both. I don't think the two are mutually exclusive. I think the two are actually very strongly entwined. Quite often, for us this year at least, M&A is the wild card, because the more M&A that happens, the more capital raising to finance the M&A. So I think capital raising will still dominate the Indian capital markets. I mean, for sure. But we have seen, flashes of some fantastic M&A. I mean, you saw Vedanta Kane, which is, I think, globally one of the bigger deals this year, and transforming deals too. So
you just mentioned the Vedanta Kane deal. Things haven't been very good from a regulatory standpoint. Natural, or do you think that's a hiccup that's likely to stay?
People everywhere face these issues. I mean, you have these issues in a variety of sectors, and that's one of the factors that go into acquisitions and acquisition financing. So,
what kind of sectors are you betting on? If you look at the M&A story, is there a clear distinction in terms of what is going to be driving this layer and this kind of a leap that we're seeing? This is quite the second wave, post the crisis. Some had actually just given up because they couldn't survive, but this seems like a thought-out M&A plan or a fundraising plan.
I think energy, clearly. The other space is, metals and mining, because a lot of the growth the commodity boom kind of fuels the kind of the growth in a lot of the emerging markets. So, metals and mining and commodities. And once again, it really is a question of, what Indian corporations aspire to on a cross-border basis, because given the kind of the recent market trauma that we've all been through, there are a lot of assets which may be fairly priced or undervalued in the Western world, and that throws up a lot of opportunities for Indian corporate.
But you do realize, I mean, there are plenty of challenges there in the mining sector, the government-led side of the story. Is that going to be a big thumbs down for any of these deals to go through?
No, I think you will find that a lot of countries today are looking at sufficiency or self-sufficiency with regard to natural resources. I mean, China falls into that bucket. Most nations do. Be it energy sufficiency, be it and that is a theme. Mm-hmm. And I don't think India is alone in terms of kind of regulatory requirements, etc. To part of it is basically wanting to make sure that their own self-sufficiency is preserved, sure. And at the same time really looking elsewhere to further kind of engender that theme. So you're seeing that across the globe, where every country is, or a lot of companies in the space are looking for natural resources assets, and there are certain regimes which are less strict and certain which are more, and I think you just end up finding a balance.
Then do you see a lot of Indian companies going out there and then driving the resources M&A by being outside the country rather than inside?
Overseas to the extent possible. I mean, quite often, we see this in the power space where, to basically get this self-sufficiency, you see companies looking for coal assets. Yeah. And that's a theme, pretty much, that's a global theme. Likewise, oil fields. So it's a pretty common theme, and I don't think India alone is driving that. I think pretty much most countries are.
Has the ticket size of deals gone up? I know bankers like to, in some ways, keep a good tab on how the size of deals is changing or evolving.
I would say 2009 was the year of the elephant. I mean, we saw some, absolutely staggering deals in the capital markets. I mean, you saw the rights issue of HSBC, which we led, which was close to $20 billion. We saw deals by Rio, which was 15, so you saw some seriously big tickets in through 2009. This year has been kind of less around capital raising by companies. It's been more around IPOs has been a dominant theme. We've seen the return of the IPO, and I think that looks set to continue.
What about the Indian big ticket deals? Where are they, and are they likely to come back? Because we are sort of capped at $11 billion at the moment.
We saw the Coal India IPO this morning. I think it was kind of, that looks like a multi-billion-dollar deal, but nowhere near the kind of the 15, 20. We're still some way from it.
Would you at any point believe that corporations have bitten a bit more than they can chew? Is that some concern around the India growth story, the corporations and their hunger?
Not really. I think it's just a function of, corporations are still in a more nascent stage. I mean, the market caps of a lot of the companies are much bigger than they used to be, but still, to raise $20 billion, you need a company the size of HSBC to be able to do that. Yeah. So you find that the mega corps are raising that kind of capital, but it's only a matter of time before Indian corporations are.
What's your outlook for the next half of the year? Would you anticipate up till March we're likely to see a little more hiccups? Back in India we've seen rate increases, though of course in the West it's quite a different story. But what is the second half of the year, financial year, till March 31st look like to you?
My guess is rates are not going, way too fast, up that fast in the Western world. I think, there is still hope that, quantitative easing will continue, and effectively this kind of nascent recovery is protected, and effectively nurtured. So our view is going to be, it's going to be a market which is going to be characterized by rally correction, at least in the Western markets. There is effectively a lot of comfort that we are out of the woods, that the economy has kind of gathered some momentum, but there still remains a lot of macro uncertainty, given concerns around, government deficits, etc. So there will be a lot of reaction to news flow, which is macro driven predominantly, and that will lead to rallies and corrections in the markets. And hopefully, earnings and company performance will soon overtake all this news flow, and we'll have better markets ahead. But for the near term, I think rally correction, a lot of volatility. That's here to stay.
Are we factoring in the future a bit too much? Are these markets not overvalued? Or would there be concern around whether these companies actually can deliver on this investment and reflect the earnings? The stocks are crazy.
Yeah, but you wouldn't you, in a market which is growing so rapidly?